Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
We hang the petty thieves and appoint the great ones to public office. Aesop, politicians are like diapers. They should be changed often, and for the same reason. The tax collector is a person who estimates your income and then rounds it up to the next highest tax bracket. If it's true that our species is alone in the universe, then I have to say the universe aimed rather low and settled for very little. I'm a god in my own home. My wife is an atheist.
The Sensex of 2026 barely resembles the Sensex of 1991. Back then, manufacturing made up nearly 98% of the index. Today it's down to 38.5%, sharing the top spot with financials at 38.5%, also at 38.5%. Meanwhile, the IT services, once over 20% of the index, now accounts for just 9.2%. The message is clear. India's stock market has evolved alongside its economy, from factories to software and now to finance-led growth. Markets don't just reflect the economy, they reveal where investors believe the next decade of growth will come from. The US earnings season is giving bulls plenty to cheer about. With 61% of the S&P 500 having reported, 64% have beaten earnings estimates by more than one standard deviation, one of the strongest performances on record. Even stripping out mega cap tech's one-off gains, earnings growth is tracking around 26% year-on-year, and analysts have already nudged 2027 profit forecasts up by 1%. When profits keep surprising on the upside, expensive valuations suddenly don't look quite so expensive. When it comes to battery efficiency, India is punching well above its weight. Tata Motors and Mahindra rank as the world's most energy-efficient EV makers, consuming fewer watt-hours per kilometer than global giants like Tesla and BYD. That's India's engineering philosophy in action. Build cars that go faster on every unit of energy, even if charging speeds and driving range still need work. In a country where affordability matters as much as performance, efficiency isn't just a feature, it's a competitive advantage. Artificial intelligence is coming for tasks and not necessarily jobs. Goldman Sachs estimates that 8 to 12% of India's non-agricultural employment could be substituted by Gen AI, with sectors like education, media, financial services, and telecom facing the highest exposure. Meanwhile, manufacturing and construction appear relatively insulated for now. The bigger opportunity may be for workers who learn to use AI rather than compete against it. History suggests technology doesn't just eliminate work, it reshapes it. The winners are usually the fastest to adapt. Behind India's growth story is a less glamorous but far more powerful number: investment. Since 1991, India's gross capital formation has climbed from 23.6% to 33.9% of GDP, making it the second highest investment economy in Asia, behind only China. That's money flowing into factories, roads, ports, data centers, and infra that can drive growth for years to come. Consumption grabs the headlines, but investment builds tomorrow's economy. And India's capital spending story is quietly becoming one of its biggest competitive strengths. India's latest fuel data tells a very simple story. The economy is still on the move. In July, petrol demand rose 8.7% and diesel climbed 9.4%, driven by resilient road traffic, freight movement, and higher irrigation needs after patchy monsoon rains. But not every fuel joined the rally. LPG demand fell 17.4% amid supply disruptions, while jet fuel slipped 1.4% after months of strong growth. For global oil markets, one message stands out. India continues to be one of the world's strongest demand engines, and right now it's being powered by the roads.